Hello guys, good afternoon, good evening. Welcome to Daily Market Review. Today is July 12th. So today was a day after CPI and it was PPI. We had a large range day after another large range day. Basically, market is having a lot of volatility at the moment. I would say today was not a bad day. But let's go through what happened overall. So here's what I'm looking at. This is New York Open. Before New York Open, market rated sell sides. Right here, sell sides were taken. On ES, it had drawn liquidity down here, and WOG was not efficient. So it used PPI number to make that manipulation lower. And we had buy side here, S&T highs. Can't annotate it when it's too zoomed out. Hold on. That's the S&T highs. Now we have a dealing range, right? From PPI low all the way to the buy side, we have that dealing range. Okay, the magnet is not working. Alright, so let's take a look at what happened on at 9:30. So initially 8:30 PPI number was released. Market rallied. As you can see here, this is the clue. The market is respecting the range EQ, and it rallied one more time. Came down here. This is New York Open chop. But before open, what we had was, it was also mentioned on the stream, we had this inversion fair value gap, which is essentially a trap because the price was spending time or accumulating below it. Right here, as you can see, the accumulation, this time was spent right before New York Open, 9:29. That trap shorts was confirmed. As you can see, in the first 10 minutes or 20 minutes of the market, it was respecting that trap fair value gap to rally the buy side. Also, it formed a bullish SMT divergence right about here at those lows, right there, right here. Bullish SMT divergence, market rallied, buy side is taken. Now it formed a new dealing range. This is a short term from lows, or you can take it from SMT. It's the same thing really. Dealing range came down here one more time and rallied. Now the clue here is the rate below the down close candle, because the down close candle becomes an order block basically. If I take a look at the mean threshold of this down close candle, as you can see, it's going to give this candle's low. That is algorithmic price delivery. Now the on a higher time frame though, the whole block becomes the OB, so you can use this open price as your order block high. This is an aggressive entry, stop loss below sell side or SMT lows. So the market rallied. This is OB. Market rallied, took the buy side. Now, as it moved further, so it's expanding, never formed a bearish divergence along the way. Okay, so there's no reversal signal or pullback signal until it formed this SMT divergence at the highs. As you can see here, Nasdaq made a lower high. Now we have a dealing range from the lows all the way down here below the SMT up to the high. Now it didn't come down to the range EQ, which is even better because that means the market is stronger than it should be. So here it formed an SMT divergence instead. Right there. It's formed an SMT divergence instead. Same deal as it was here. Rate below down close candle. Now down close candle becomes the OB. Here's the OB. You can use the high or the 3 consecutive candles. Either or is fine. Then you have the mean threshold, which gives this candle's open almost. And market rallied. Basically, one setup for life high is taken out there. It offered more or less 40 points. Now it kept running higher. Let's clean this a little bit. It kept running higher. At the highs though, there is an accumulation. The price spent time there, but here's the important part. This is how you can understand whether a rally below or a sell-off like this is a pullback or a manipulation, or I mean reversal or manipulation. So if you look at the highs right there, you see it's not doing that much damage whatsoever, and it's forming an SMT at the highs here, which is not a meaningful SMT divergence, honestly. Actually, that's not even an SMT divergence, sorry. What I meant was the market is not forming an SMT divergence. That's what I was going to say, my bad. So it rallies or it pulls back. Now we have a new dealing range from SMT low all the way to the high. Now we have this dealing range here, once out for life buy side, or second leg high, second leg target basically. But I spent time here a little bit, but if I zoom in, I'll show you a couple things here. So first things first, it formed an OB here, right here. Not the best one, but it's what it is. So it didn't, unlike this one, it didn't raid below that candle. So it formed an OB, rallied, displaced, initially displacement here, rallied, initially rejected at the range EQ, came down. Now this is where I usually wait for or expect market to form a bullish SMT divergence because of the initial rejection of the range equilibrium. Now I'm not sure if it formed an SMT divergence. Let me see real quick. I'll scan it. Yep, there's no SMT divergence there, but it displaced almost immediately. So it came down to, I would say, the 50% of this wick probably, more or less, or the range EQ maybe. Yep, the range EQ. Didn't spend time much, just rallied. But the clue here is, like, before this displacement above the range EQ, in my opinion, there's no entry. Okay, maybe like you can long this turtle soup on a lower time frame, maybe like down close candle below it manipulates and rallies. You can long that and put your stop loss below the down close, but that's risky and aggressive in my opinion. So you can wait for, because there's no SMT, you can wait for displacement above range EQ for bullish rally. Here's the displacement above the buy side, above the premium. And there, what happened was, here, the down close candle, it shouldn't have violated that down close candle. It should have IFED'd here, but it violated that candle. So what you can do or expect is basically manipulation, SMT divergence, or 3 drives, something like that. So in this case, it was 3 drives here. So for me, in my opinion, if I was to be long here in this fair value gap, and if I see the 1244 candle violates that down close candle, that's why I would manually close my position and wait for a re-entry later on. So here, 3 drives, market rallied, order block here, or you can use a fair value gap as well at the third low. The stop loss would be below the low. Now we expect or anticipate the third drive, 3 drive, sending price higher, which is what happens here. Range, it comes down into the discount portion of that fair value gap one more time. 3 drives, rally. Not sure if it diverged there also with the yes. Let's see. Yeah, there is a divergence also, bullish SMT divergence. So that's the signal. Again, before the displacement and that SMT divergence, for me, there is no setup or execution or entry whatsoever. And the rest is history. It rallied basically without no signs of any pullbacks or whatsoever. No SMT divergence. You can watch the highs. No SMT divergence until it delivers buy side. Here, there are a couple clues that you can look at. So if I zoom in on this leg, if you missed the initial entry, as it comes down into this fair value gap, here's the clue: down close candle, IFVD below. That's a long. Okay, rally, down close candle, IFVD below, rally. So the thing is, these are basically lower time frame sell models or microsecond sell models getting completed. This is a manipulation that market rallies. Okay, and this indicates strength, and that happening in a fair value gap is even better, because then you can use those down close candles as an order block. So here, this is the raid and LB, raid, LB. Okay, same deal here. IFVD below, down close candle, order block. So these are, entry strategies basically. That's why I'm mentioning this, and very powerful, because if you're right about the drawn liquidity, you can put your stop loss below the candle that's IFVDing the down close candle. So in this case, this low, because it shouldn't get violated. So here, the OB, let's say you entered at the OB, you put it below the IFVD candle. So here you see the IFVD, so you enter on the third candle, the stop loss would be below that low again. Okay, so you go like that. Basically, the order flow has not changed. So here's the same deal. So this indicates a very strong move. IFVD goes higher. Now here, didn't have an IFVD, just left breakaway gaps. Rallied. This is all-time highs on ES. So it took the buy side on the daily, and on Nasdaq, I believe that's let's see anything, whether it's, so it hit the basically the OB, which lacks manipulation on the lower portion of it. I believe there's a small, so basically like an order block, immediate rebalance kind of thing. Let's zoom out a little bit, and then it formed, I'm not sure if it diverged there, but yeah, it didn't diverge. It formed a rejection block instead and dumped very sharply. This could have ended up being a manipulation, but because it dumped sharply, now the market is either in a pullback, okay, or let me delete all this. It's either in a pullback or it's in a reversal. Now you have a new dealing range though, okay? So from SMT lows, which is here, all the way to the high. You can also take the very low as well if you wish. There's nothing wrong with that. This is a dealing range, and the market came down here, as you can see. Initially reacted from off of there, but afterwards, look at the highs. Let's see if it diverged there. There should be a divergence. There it is. Boom. So it diverged there and sold off. Fair value gap. This should be IFVD, which it was. Then sold off all the way down to the sell side, all the way down there, and it stopped basically right here. I think the reason we sold off like this at the end of the day was because of the 830 wick. It didn't manipulate it, so it was not rated, it left open. In my opinion, that's how I personally internalize it. I think that was pulling price lower, and the all-time highs reaction from ES, which is pretty normal. I am bullish. I'm still bullish, by the way, and I'll tell you why. But let's take a look at the dump also. Let's read the order flow. So here's the initial sell-off. Here's the initial sell-off. No divergence initially, and then I believe that there was a divergence somewhere here, if I'm not mistaken. Kind of lower time frame divergence here with equal highs on ES, but what's more important here is when it distributed lower. So if I take a look at this candle here specifically, it's 3 p.m. candle, so hourly candle open. It manipulates and sells off. So here something is going on, and I'll tell you what's going on. So take a look at the 2 o'clock candle open, which is here. Okay, this is 2 o'clock open, and as you can see, I'll zoom in, and this is the 1 p.m. hourly close. What do you see here? This is a rejection block on the hourly. If you don't believe me, I'll go on the hourly and I'll show you. There it is. Rejection block and gap down. Let's go back to 1 minute. So the market basically waited for 3 p.m. candle to open, manipulation into what do you call it, the hourly rejection block, and it sold off, and also it gapped down, which indicates weakness always. So this is the open, this is the close, and this is the open, this is the hourly gap. Okay, so that gap also could have been used as an entry if you wish, but the clues were there. So when it came down to range EQ, at that point I'm like, okay, this is going to break down because of the hourly look. So SMT divergence formed after range EQ was touched, and then it was just one-sided order flow. Fair value gap, sell off. Here, fair value gap, sell off. Another one here. This is at the end of the session. Fair value gap and sell off. Here it overshot a little bit because of this candle right here. It lacks manipulation, so it had to rebalance above it, and then it closed. The market was closed. I would say it was a clean, clean buy side, clean sell side. Both were clean. If you took one or the other, they're both fine if you ask me. Another thing I want to mention is this one's on the hourly and on the daily. So on the hourly, I was expecting an expansion higher in the afternoon session, which happened in the first portion of it, and that was because of this rate here. So IFED below down close candle. Once the 12 p.m. candle closed, IFED, the next candle has to expand. And this is a higher time frame analysis, basically. Very easy, very simple stuff. It just expanded higher. Now, how can it go? How much can it go? I mean, you can just wait for, until it forms a divergence, basically, or sells off like this. You can collapse your trade after that. And also, you can take a look at the OB projections -1. Let's go down to 1 minute real quick, or hold on. It should probably give that high extent lines, almost, fairly close. Maybe on ES. Let me see. So this is the OB. This one tagged -1. I think it just fell short from -1.5. Seems like that's the rejection, but it rated all-time high, so you can also close it when it does that, or take partials on NASDAQ. So that's the first thing I wanted to mention. Very easy to read for the afternoon session. Once this closes, or I know for a fact that the 1 p.m. candle should expand. So the job is to buy below open price, okay, regardless of the 1 minute order flow. So here in the afternoon session, in the morning session, or let me put it this way, on the daily, this is what I'm going to talk about. Going into next week, I'm expecting maybe like 1-2 day of consolidation range bound market here because of a couple of reasons. One, we have the bullish SMT at the lows on the daily. Okay. Bullish SMT at the lows, so that means we have a dealing range right there. So far, it is respecting the range equilibrium, and in fact, this is the thing I was talking about in intraday. Dealing range EQ, discount fair value gap, respected, and IFED below the down close candle and a rejection block here. So everything shows more buy side, if you ask me. I'm expecting more bullish deliveries, and at least for now, I'm expecting all-time highs in Nasdaq. I think Nasdaq will catch up with ES. So what could happen is, if I take a look at the 50% of this candle, it depends on the overnight price action on Monday. It could go here and use this level to go higher if it's going to be a large range day. If not, I think we could see one more manipulation down here, range EQ, sets the swing low, and on Tuesday we can see price going for this high, closing there. The next day trades down, manipulates into the 50% of this candle, and then rally on Thursday and Friday and takes out the buy side. That's what I'm planning for now, but we'll see what happens on Sunday and Monday. Until then, have a great weekend, guys, and hope you find this insightful. Enjoy.